and flip is not what they make it out to be on TV. Everyone just wants to get into it, and if you don't do the correct underwriting on the deals, you jump into something out of desperation, it's just a recipe for disaster. Get out on the other side and be like, I made it, and that's pretty much how my first flip went. Yeah, nobody wanted to touch it, but we were buying it super cheap, and I'm saying like $175,000 at the time.
Wow.
But every year I make sure I put myself into 2 to 3 flips, and it's mainly just as a tax strategy.
Maybe the reason for some investors like yourself, so there's no good or right. I mean, it's just a matter of really where you want to be at. And
right, I definitely recommend, number one, joining a company, right? That's the best way to learn. Whether you want to do wholesale or fix and flip or anything, you're going to get pretty much... Okay, well, as a flipper, our buy box, currently, if I'm going to get into any flip, my protection is pretty much only buying big houses with pools. That's how I'm trying to like separate myself from the rest of the market.
Is to just buy or purchase real estate for tax benefits, right? To just exit profitable, which is great, right? That's a great story. Thanks for sharing. Hey guys, this is Eduardo with IRG Corporation.
Really, the biggest one is just not underwriting the deal properly.
¿El mercado se va a caer o no se va a caer?
I say with the Airbnb business, reviews are what's really important to keep your business
So I used to work
running.
for IBM. On the building ciclo de comprar y cerrar un deal. Entonces, yo sé tú como wholesaler buyer, and that basically is what we know.
Right. Hey guys, this is Eduardo with IRG Corporation. We have a special guest today. His name is Jesús González. He's a good friend of mine. I've known Jesús for years already. He's been in the wholesale business for years already. He's also a flipper, but I really want to touch up on a few questions, mainly more on wholesale, because I know that's something that a lot of our audience really want to hear about. So Jesus, thank you for coming again. Thank you for being in our office. Tell me a little bit more about yourself so the audience could know who you are.
Yeah, awesome, man. Well, thanks for having me. Awesome office, by the way. Really cool stuff. So yeah, Jesús González, JG Equity LLC. We also go by One Click Home Buyers. We've been doing primarily investment real estate for the last 11 years. I got lucky enough to start directly into wholesaling from day one. And yeah, we've been doing that pretty much ever since. We also do some fix and flip. We do some novations that, you know, is kind of the new trend. And yeah, pretty much anything that we can do to make money on real estate.
Beautiful, beautiful. So I know you kind of mentioned different things. I mean, and I really want to touch up on that, right? Because I feel that, I mean, kind of doing wholesale, fix and flip, novations. What do you feel, I mean, based on those three different business models, right? What would you say, I mean, is the best like point of entry for people here in this audience? I mean, how they always ask me, I mean, Eduardo, how can I ask into real estate investing? What's the best way to start?
Yeah, well, I definitely think of the three avenues that we discussed, wholesale is probably the best starting point. And the reason is because you require minimum capital to get started, right? If you have the drive and the hunger to make multiple calls, some of these softwares, you know, like PropStream, and there's many other ones now at this point. That's kind of one of the older ones out there. They only cost about $100, $150 a month to get started, pull a list. As you know, skip trace it, get the phone numbers, start calling people. And then once you get your feet wet on that aspect of things, really is just an earnest money deposit, which on average we do about $3,000 per transaction, but I've heard people doing $10, $100, $1,000 escrow money deposits. So when it comes to risk, I think that's probably the lowest risk level that they can take. And from personal experience, I think it's the best of the three businesses.
Nice,
because of that specifically.
So that's good to hear. I mean, I myself, I mean, we also do a lot of wholesaling, and I know one of the biggest challenges is pretty much scaling the business.
Right.
Tell me a bit more about that. I mean, where are you at as far as deals? I mean, the amount of deals that you're closing. Tell me about, I mean, the marketing. There's so many things that comes into wholesaling, right? That maybe a lot of the people that want to get into, I mean, they don't really understand. But just can you elaborate a bit more as far as, I mean, what it is and how can you do the marketing? Where are you getting your marketing from? I mean, how much the cost per lead, the acquisition cost, and those things?
So, all right, so you threw a little bit there at me, but I think when it comes to scaling, that's probably the hardest thing when it comes to any wholesale operation. just because it's a long learning curve, and once people get going, then they understand the vision and they'll stick around. But you got to have culture, you got to have an office, you got to have incentive to keep talent along. And I think that's what most people struggle with, myself included. I've always had a very small operation, right? I started out with a company that was way bigger. And then I've tried different things along the way. Like I said, we've been doing this 11 years, but probably after about year 2, I jumped ship, doing my own thing, had a bigger operation, big boiler room status, everyone hitting the phones. And yeah, man, it was tough. I mean, just retaining people, feeling that pressure of them depending on you to provide the next deal, provide the next lead, it is intense. Regardless, we did good, you know, and then I did have a partner that didn't work out. Tried different ventures with friends in the industry, another small little partnership here and there, but after trial and error, I realized that I didn't want a big operation. I didn't want this gigantic selling machine. I kind of focused on the less is more mentality, higher spreads, less volume, less overhead, less expenditure. And that's kind of what I've been just drilling down ever since then.
Yeah, so there's no good or right. I mean, it's just a matter of really where you want to be at, and whatever decision that is obviously just going at it every day. Even though you're a small operation, I'm assuming that you got a lot of challenges on a day-to-day where...
Oh, yeah. Absolutely, man. I mean, I think everyone that tries to start doing wholesale on their own, right, I definitely recommend, number one, joining a company, right? That's the best way to learn, hands down. Whether you want to do wholesale or fix and flip or anything, you're going to get pretty much full training as if you're in a university, right? I'm a college dropout myself. I've always just been kind of like a hustler, but that's the best place to start, is just to work with somebody. And if you don't, then it took me a long time to realize the value of spending money to learn from the right people, right? There's a lot of gurus and a lot of bad people out there that sell hopes and dreams, right? And don't really give the value, but there are also, on the flip side of that coin, a lot of really good people out there in the industry, or good groups that you can become a part of and just learn, you know, be vulnerable, ask questions, stay hungry, and, you know.
So it's a matter of determination, guys. As Jesus said, I mean, he's been 11 years in the industry, most likely flipped hundreds of properties himself. I mean, he has a small team. However, he feels that he wants to scale maybe at some point. I mean, I know we discussed this multiple times. Maybe it kind of makes sense for him to just stay small at this point, but he has other ventures, and maybe I just want to ask a few things about the fix and flip business, which I know, I mean, it's very attractive, very appealing for some of the audience as well, where a lot of people think that's pretty much, I mean, when they think about real estate investing, they think about fix and flips for some reason, maybe because of the shows, I mean, the TV, and that's how they feel that's the only way of investing. So I really want to touch up on those challenges that maybe at some point you faced. I know there's a lot of challenges when it comes to fix and flips, but tell me a bit more about, I mean, what you're doing in the fix and flip space.
Okay, so today, or you want to hear kind of like some horror stories from the past?
Combination of both. I think that was the second question, but we could start with the horror stories, because I think that's what most people want to hear.
Well, yeah, definitely. I think fix and flip is not what they make it out to be on TV, you know, and HGTV and all these shows, they don't show half of the expenses that we have, the property taxes, the holding, the interest that you're paying from the lenders. Man, the squatter that goes and breaks into your house, the sprinkler system that you thought was working and isn't working. I mean, the list goes on and on and on. So everyone just wants to get into it. And if you don't do the correct underwriting on the deals, you jump into something out of desperation, it's just a recipe for disaster. So I'm definitely the type of person that puts myself in uncomfortable situations to learn and just get out on the other side and be like, I made it. And that's pretty much how my first flip went. You know, I was in the wholesale industry. There was a deal that nobody wanted. It had liens, it had violations, it had 2 illegal additions in the back, just outside of Coral Gables. It wasn't Coral Gables, but it was just outside of it, unincorporated Dade County. And yeah, nobody wanted to touch it, but we were buying it super cheap. And I'm saying like $175,000 at the time. Wow. Now it's probably like an $800,000 home, right? But I bought it because the opportunity presented itself. So out of necessity, I was like, well, I want to fix and flip. I've seen the shows. I want to get on the other side. I'm a wholesaler. I want to be like the guys that I'm calling, selling these houses to.
Right.
So I put myself in this deal, and man, long story short, 3 years of holding this property, battling with the city, getting crushed with liens that the city wouldn't comply. It was just a nightmare. But long story short, made it out the other side. We were able to exit. We sold it. We were profitable. But it was a real nightmare.
A real nightmare.
So I think the lesson is just be careful what you buy.
You just live and learn, right?
Yeah.
That's the kind of motto.
Yep.
So, I mean, there's a lot of people that won't spend 3 years of their life, right? Kind of fixing and flipping a house, which they never thought it was going to take so much, right? Mm-hmm. And after 3 years, he was able to just exit profitable, which is great, right? But anyways, that's a great story. Thanks for sharing.
Yeah. And then the positive parts of it, since then, that was a big learning lesson, right? Since we do primarily wholesale, I just focused back on that because it was kind of the cash flow of the company. But every year, I make sure I put myself into 2 to 3 flips, and it's mainly just as a tax strategy, liquidate some of the income that we're making, and that's how we're able to save on taxes pretty much every single year after year.
There you go. So maybe the reason for some investors like yourself is to just buy or purchase real estate for tax benefits, right?
Exactly.
Which, I mean, maybe when you start, you don't know that's a possibility. That's something or a reason why you would purchase a real estate or an asset, right?
Yep.
Awesome. I have a few questions here that I think are very important for the audience to kind of hear. What separates you from, other investors? What would you say? Why would I sell a house to you? Or if you kind of compare yourself to maybe competitors, right?
Right.
Why are you different?
Well, that's a really good question. Well, really, the bottom line is because, like I mentioned, we're not a giant operation. We're very small and nimble, and because of that, we're flexible. So I'm able to make executive decisions where a lot of big corporations will just pass up on the deal. We're not scared of things that have issues, right? Like I mentioned, the liens and violations. With time, it was scary at first and it was a nightmare, but now I feel very comfortable with buying these properties that most people run away from, and we see the opportunities. So our biggest thing, just even on the wholesale side, a lot of sellers, let's say, we have a bad rap, right? There's a lot of wholesalers out there that just maybe tie some people up and don't perform, or they won't buy it, they're not honest. So I think on our end, we definitely operate very honest from the very beginning, and we always try to take the deal all the way to the end, to the closing table, no matter what, right? So really, that's the differentiator.
So that means a lot, especially when you're in that distressed situation and you're a seller. And there's all kind of people out there, but a lot of the wholesalers, at least in our industry in South Florida, I'm fully aware of how that works, where they kind of tied up your property to try to just wholesale it, and they don't perform, which is it could be a nightmare for a seller, right? Yep. Where they're kind of relying on you to really perform for them to just get their money, and all of a sudden they just kind of canceled. So that's something very common. Tell me, what do you think is the main reason, or one of the things that flippers kind of do wrong since inception, since they purchase a house? What do you think is the biggest mistake they made?
Yeah, that's a loaded question, but really the biggest one is just not underwriting the deal properly, right? A lot of times they're not buying the home as cheap as they needed to purchase it, and I think you've heard the saying before is you make money when you buy, not when you sell.
There you go.
That is the most truthful statement ever. If you buy cheap enough, you can't lose. If you're trying to force the deal, you will likely lose money. Right. Because rehabs tend to go over budget, on average 5 to 10% of whatever you're expecting to spend on it. There's always unseen expenses that you have to budget for. So if you miss that alone, you could be in a tough situation. Additionally, holding time. Right? If you get hit by the city for a work without a permit violation, if you get a hard money loan that has too high of an interest rate, there's just many mistakes that you can make. So you have to be very weary of, like I said, the first thing, buy it very properly, wait for the deal, don't get desperate, find the right opportunity, have a budget for unseen expenses on your rehab, and then move as quickly as possible. Yep. Okay, and then the last one is be very aggressive with the resale value. So a lot of times when people are underwriting the deal and they think that the home is worth $500,000, when there's only one sale in the neighborhood for $500,000, but there's 3 other ones that sold for $460,000 or $450,000, they automatically would say, "Oh, my house is going to be worth $500,000."
Right.
That's a $50,000 difference. That if they don't get that $500,000 and the average is the $460,000, $450,000, they're likely going to fall at that number or in between.
Correct.
So yeah, be aggressive with the underwriting. Take the lower comps, throw out the higher one, and.
So, there's so many things, guys, that could definitely go wrong. You want to make sure that before actually buying the asset or the property, you take all those things into account, because numbers could change, the market could shift, cost. The construction cost could change, but I think the main or the biggest thing that I would say is the underwriting side, where you want to make sure that you underwrite all deals correctly. When I say underwrite, it's just making sure that when you buy it, you're just buying it correctly. If you buy right, even though you kind of just go bad on any of the other factors, most likely you're going to be profitable. And it kind of applies to wholesale too. Because obviously we sell to investors. So on the wholesale side, it's kind of the same, where you want to make sure that you buy right?
Yep.
Because if not, you're not going to be really able to sell it to an investor.
Exactly.
So I think that rules applies to everyone. When it comes to like underwriting, I think that's a great topic, where a lot of people come to me and say, "Eduardo, what kind of percentages are you working? What kind of buy box you're working with in 2025? How does that look as a flipper, right?" Tell me a bit more about that.
Okay. Well, as a flipper, our buy box currently, if I'm going to get into any flip, my protection is pretty much only buying big houses with pools. That's how I'm trying to separate myself from the rest of the market. There's a lot of little tiny houses in South Florida. There's a lot of 1,000 square footers. Prices are expensive, right? But I think that it's just a simple supply and demand type of look on it. Right. That if you have a larger type of property with a pool and something that's not common, people will still pay premium. And then obviously it's just location. So buying the right property that people are looking for, and then on the buy box of purchasing, I'm just very conservative now, right? When we were willing to take risk and seeing the comps, like I mentioned, that were really high, now we're only going with the ones that are for sure sales, and we understand that we're not guaranteed this number in 6 months, because really that's what it ends up working out to. A lot of people are like, "Oh yeah, I'll be in and out of this in 3 to 4 months," and right. That's just not the case anymore.
So let's just kind of put an example, right? So let's say property is worth in the market after repair value, ARV, right? $500,000, right? And it needs, let's say, $100,000 worth of work. How much are you willing to pay for that house?
A quick rule of thumb is about 70% of ARV. Okay. That's the quickest rule of thumb. But I go way more extensive. I have entire spreadsheets that break down taxes, interest, utilities, everything.
Everything.
Yeah.
So it's not as simple as just, there's a specific number. He mentioned a spreadsheet that most likely is going to calculate, all the different costs involving the transaction, which is something you guys need, right? The right coaches, the right mentors, the right people that are in the business, that are buying all these properties, like Jesus, right? Where he's been involved in the game for 11 plus years and have done multiple deals. So the last question, Jesus, and it's been great again having you in the podcast. I think the audience could definitely benefit a lot from it. Is there any specific book or the last book that you read or podcast that actually has inspired you or changed your life?
To be honest with you, I'm not much of an actual reader, which is definitely different from the rest of the people out here, right? Everyone will drop 10 different books and their favorite author. I'll listen to what people have to say, right? So Traction, I've listened to the Spark Notes on it, AI summaries on it. I don't sit there and read them all. I'll audio listen to some books. When it comes to podcasts, that's definitely more in my territory. Bigger Pockets, that one. Market Disruptors with Steve Trang. But more than anything on the podcast side, I get my biggest value from just sitting down talking to people like yourself, right. Putting myself in rooms that are elite, right? And just people that where I want to get to. And then I go in there and yeah, sure, I think for the average person, I've done very well for myself, right? But there was always somebody doing a lot more than you.
Right.
And then going in there with just a humble mentality and putting your head down and being like, hey, listen, this is what I'm struggling with. This is what I'm trying to do. That's where I get majority of my value. So not so much books and podcasts. I try to get connections with people they're doing good and get their number, and I bother them. Right. Hey, how you doing? I need help with this.
Listen, right? So that's key, guys. So there's definitely options out there. I mean, there's podcasts, there are books, there's relationships that you could start with, right? I mean, when I first started, I remember that it was kind of hard for me to just really find that mentor. If that's the route you wanna go, but I used to go to every networking meeting, free networking meetings in South Florida, right? So I mean, my thing is, if you really want to do it, I mean, you're just going to find a way on how to do it, right? So being humble, I think it's very crucial, and more important, just being out there and expose yourself every day to what it is that you want to achieve, right? So, Jesus, I think that's pretty much all my questions. Awesome. I do appreciate you coming. It was great having you here in the podcast. Thank you again, and I wish I could have you here anytime soon. And
let's do it again.
See how 2025 treat you. Thank you, man. Appreciate it.
All right, cool. That was great.
Thank you, man. Appreciate it. Hey guys, this is Eduardo with IRG Corporation.
Really, the biggest one is just not underwriting the deal properly.
¿El mercado se va a caer o no se va a caer?
I say with the Airbnb business, reviews are what's really important to keep your business
I used to work
running.
for IBM. Pero on the building, ciclo de comprar y cerrar un deal. Entonces, yo sé tú como wholesaler buyer, and that basically is what we know.
Right.